Welcome to the Interledger Salon, presented by the Interledger Foundation. These salons are designed to create space for thoughtful, honest conversations with people across our ecosystem who are working to build a more equitable financial world and are here to share their expertise, lived experience, and hard-earned knowledge. My name is Sheena Allen. I'm a serial entrepreneur and fintech founder who has spent the last decade building financial products focused on access, inclusion, and economic mobility. Much of my work is centered on communities often labeled as financially underserved, a phrase that carries many assumptions, and today we're going to dive into one of those assumptions. The idea that a lack of access is primarily the result of a lack of education or understanding. Throughout my career, I've seen financial education positioned as the silver bullet for financial inclusion. The thinking goes, if people just understood how credit works, how interest compounds, how to budget or save, then access would naturally flow. But I've also watched incredibly knowledgeable people still get denied accounts, charged excessive fees, locked out of legacy infrastructure, and excluded by rules that they had no hand in creating. That tension between what people know and what systems allow them to do is what brings us here today. So the question we're asking in this salon is not whether financial education is important, because it absolutely is, but whether understanding alone is enough. Where does education genuinely empower people, and where does it quietly shift responsibility away from the systems that we were never designed to be included in the first place? I'm joined today by Evan Leaphart, a friend and fellow fintech entrepreneur focused on financial education and credit building, and Ronaldo, CEO of Balanced Financial Wellness, and a former credit union CEO with deep experience in financial coaching and institutional leadership. Together, we'll explore how education, access, trust, and a system design intersect, and what it really takes to move from financial knowledge to true financial inclusion. Thank you both for joining me. So, Evan, we'll start with you.
Sheena, thank you for having me. Ronaldo, pleasure to do this with you. My name is Evan Leaphart, founder, CEO of Credit Academy. I like to say I am not the financial guru. I am the use case. So like many listening on the call, I'm the person that turned 18, got a credit card right away and maxed it out on who knows what. And as a serial entrepreneur, this is business number 9 for me, tech startup number 1 though. I had always set out to build the vitamin and also the pain pill towards financial education. I feel that we as a country spend a lot of time issuing products right away without making sure that people understand them. So I live in the world of financial education and access. So nice to do this with you all.
Love it. Thank you, Evan. Ronaldo.
Yes, Ronaldo Hardy, President and CEO of Balanced Financial Wellness. And I got to financial wellness by way of financial services. And I got to financial services, I believe, just by way of purpose. It was happenstance that I entered into what has become my career. But over my, 22-year journey now, 23-year journey maybe, being in financial services, I have seen the importance of making sure that organizational strategy is in place to address community needs specifically. Being someone who was raised in poverty myself, I really have a commitment to making sure that the work that I do advances key areas of communities that I have the opportunity to serve. And more specifically, for nearly the past year, I've had the opportunity to lead Balanced Financial Wellness, where it is our focus to make sure that Americans have the tools, the resources, and that we create partnerships for access that help to advance wellness across our country. I believe that we're in a critical time period where so many people absolutely need access to information that helps to make them financially well, but then products and services that align with that to make sure that they have all of the solutions to move themselves forward. And I'm excited about the discussion today.
Love it. All right. So to start off, I want to ask, how do you each personally define financial inclusion? And why does that definition matter in the work you do?
From my lens, it's, we live in a capitalist country here in the States. And for me, it's making sure that everybody has access to the same tools and resources and isn't ousted by any sort of bias that may exist. The reason credit is in the name of what we do is because I truly feel that credit, when misused, can definitely be a tool that keeps people down. And that's where they start to get excluded from opportunities. But when leveraged properly, it is one of the few tools that we have in this country that can be leveraged to generate wealth. So, when you have somebody that may be, quote unquote, underserved or coming from a low to moderate income community and is looking to climb up the economic ladder, you need to be able to find resources to be able to get them to do so, right? Let's say you want to open a salon, no pun on the name here, right? But you need the capital to be able to start that. How are you going to do that if you don't necessarily have your own savings? But if you have potentially a good credit score, network, or resources to be able to help you climb up the ladder, that's important. And that's what financial inclusion is about, to say, hey, I'm not defined by where I am right now. I'm more so defined on where I'm going. And I shouldn't be excluded from any tools or resources to get me to a different ladder based on where I'm kind of starting in that journey. So making sure that no matter where somebody is, age, demographic, income, they feel that they have a horse in the race, to say.
And for you, Ronaldo, how do you personally define financial inclusion?
I love that, Evan. For me, I define it as a pathway to peace for the quality of life we desire. And I think that that's important. We're on a journey at Balance to address the holistic wellness of consumers. And one of the things that we like to say is that before an individual can understand what financial wellness looks like for them, there has to be some definition around the quality of life they desire. And that's not all the same for all of us. I think with seeing it from that vantage point as well, it opens the pathway to reach more people because there's this myth that financial wellness is a certain amount of income generated. It's a dollar figure, and that's not necessarily true. Working in this field as long as I have, I've seen that people can be at various income levels and still not be well. And what happens with people when they grow in their income but they have not grown in their understanding, their literacy around finances, and what it looks like to create wellness for themselves. They grow in shame. So they may have more resource, but now they're more embarrassed about their inability to manage that well. So that's why I like to say it's a pathway to peace for the quality of life we desire.
Yes, it's funny. When I was running Capway, it was probably one of the biggest lessons for me was clearly we were focused on unbanked, underbanked, financially underserved. But I realized very quickly that there were a lot of people that had six figures that were also living paycheck to paycheck and had no clue actually how to handle money, to be quite honest. So I'm right there with you. But kind of to the point you just mentioned, speaking from your vantage point, what gaps in the financial system first stood out to you early in your career? And how did it influence, or how does it even now influence the work that you chose to pursue?
So I would tell you one in particular, and this comes down to products and services, but access to credit is a critical one, right? Because I know that in this workspace in particular, when you think financial wellness, a lot of practitioners, or some that I've seen, some that are really famous even, drive people towards a debt-free life. And that is an outcome for some people, but I like to talk about a debt responsible life as well, because realistically, not everybody can live their life from a vantage point of not engaging credit at all. So, what I have seen is that access to credit can become very difficult for many people, depending on the community that you live in, especially if there's no direct access to a CDFI or a community development financial institution. There may not be a product or service designed with you in mind as a consumer. So there are many gaps that can exist just from that vantage point. Having been a kid who grew up in poverty, seeing my parents get second chances, witnessing them have a repossession, but then get a second chance to have a vehicle again, or being able to obtain housing for us, I knew directly the impact as a kid that that had on me. And it was important for me to bring that knowledge base into communities that I had the opportunity to serve. And so those who really are serious about this work, they will get very creative about what those solutions look like. The second credit union I led, our vision when I got there, we changed it. Our vision became to eliminate poverty in our community with a mission of financial empowerment for all, which informed our strategy for how we address that. And we really developed some very creative products. One in particular I'm really excited about, and we may talk about that in a moment. But that's just some of what I see is that if you don't have organizations that want to reach consumers who are traditionally overlooked, then access is an issue. And that's both on the deposit side and also on the lending side, because you also have people who need second chance opportunity on the deposit side. Many financial institutions use check systems, an evaluative tool to determine whether or not someone should be granted the opportunity to engage with the organization in their deposits for their checking account responsibly. And organizations that are cut and dry, and some of them are just bottom line driven and they want a specific consumer. Sometimes they never think about those who need the access unless they're doing so in a predatory manner. And I think that it's important for there to be a greater access for communities that are overlooked.
This is actually not even a question I was going to ask, but to piggyback off that, because of the work that you have done, Ronaldo, and because of the work you are doing, Evan, particularly with CDFIs and trying to get into more local areas. We talked about this at the 2025 Interledger Summit. We had a panel, I was on a panel about CDFIs, and there was a question that came up. And the question was, do we think as a panel, and I'm proposing this to both of you, Ronaldo is someone who ran a credit union, and Evan, again, someone who CDFI is one of your main partners that you look to work with. Do you feel, one, that due to them trying to shut down or taking the shut it down, the CDFI fund, so that money that goes to CDFIs, due to that and due to less funding, but also where we're going with artificial intelligence, do you think that the world that we need of community banks, credit unions, very localized regional banks that know their community way better than any large bank ever will, do you think they will disappear in the next 10 to 20 years?
I'll start as the rookie voice so Ronaldo can provide the veteran perspective here. I think you will see consolidation, right? Like if the resources available to folks is kind of condensed, right? Then it's, you don't want everybody fighting over the same things. I think we'll see some of that. And those trends have definitely existed in credit unions and I think will continue. But I don't think the work necessarily has to change. I think as you mentioned AI and things becoming more digitized by the moment, it's actually increasing the need for things that are more analog, right? Like I always make the joke around, like, we have all these streaming services and we kind of fragmented how we watch. And now everybody's like, man, if we could just have one service, it'd be great. It's like, well, we had cable, but right. So like, I think what's happening now, you talk about AI and simplifying how people understand things. There's going to be a moment to say, hey, I need to actually engage with somebody in person and somebody that I know is real, especially now, because I don't know if I'm talking to somebody via AI. I don't know if somebody visually is actually there digital. So I need to go into these places. And when the physical branch becomes the superhero in the process, that's where the credit unions shine. That's where the smaller local regional banks shine and the community banks. So I think it'll be kind of a harmonic process, but it might be one of those things where like less is more. But I don't think the physical component, which is really where those smaller outfits shine, is going to go away.
Evan, I would agree with you. Consolidation has been happening for over a decade and probably even beyond that. But in terms of the ramp up of it, and then there's been an even faster acceleration over more recent years because there are certain things that make a business model that really does try to uplift those who are vulnerable in communities. There are things that make that very expensive. Technology, obviously, is one of the investments that can be very expensive. And then trying to make sure that you run that business model well. When you try to reach that audience, there are some things that you accept about that. So you accept that there would be higher delinquencies, and so you start to plan for some loan losses, right? But when you're running that business model well, then you understand how to price appropriately where you're both saving that consumer but also making sure that the financial institution has what it needs to be successful. The CDFI fund is super important, specifically the grant dollars that are distributed to those organizations to be able to design products of this nature that help to transform communities. So I have deep love here. So, by the way, after I led a credit union, a CDFI, I worked for a firm, the number one firm in the credit union industry. It was part owner for CDFI certification, grant writing, and deploying of those funds in our credit union industry. So a lot of just insight here with the fund potentially being at threat of going away. And this has been a back and forth. It was going away. It was back. It's going away. We don't know what's going to happen. But It will mean that creative products and services that have helped those populations may go away. So, for example, one that we did in the community that I served, we actually created a quasi student loan product, right? Because what we identified was that there was a segment of the population that were earning 25, maybe $30,000 a year, right? And really struggling to make ends meet. And then there were all these technical jobs in the market, 80 to $100,000 a year, that were not being filled. And the gap, listen to this, was 6 months of education at the technical college. Here's where a good CDFI learns to close that. So what we thought to ourselves was, one, can we build a partnership with this technical college to be able to do these 6 months? Can we then design a quasi student loan, bring in unsecured and secured debt into a loan that allowed them to pay interest only for the duration of their time in school and also until they land the new job, right? And we said that, oh, one of the barriers for them going back to school will be access to childcare. So we were able to build childcare vouchers into our program, right? Allowing for people in the community to go from earning 25 or $30,000 a year in 6 months to 80 to $100,000 a year. Strategy around something that really transforms the community. So when you take those funds, in our case, we were getting $1 million a year from the CDFI fund that was going to our allowance for loan loss. So we didn't have to fund it. Therefore, we could take the risk to put this product in the market that transformed the lives of people. When that goes away, products like that go away, right? One other thing, and I'm conflicted right now, right? On the financial wellness side, I love the signal of, man, we should cap credit card interest rate at 10%. There's an unintended effect, right, for CDFIs that are running a strategy that says it would be responsible and we can afford to lend to an audience of people who would get 30, 40% in a different environment. We could do it for about 12%, make it more affordable for them, but cover the overhead that it will take to support it. So all these things that get thrown out, removing the CDFI fund, things that seem like easy triggers and great things for consumers to hear actually will reduce access more than expand it. And I just wish more people knew that. And also, I wish that the powers that be would be more responsible with making sure that they don't hinder access.
That's actually perfect going into my next question, which is what patterns or behaviors do you consistently see that people outside of these communities often misunderstand when it comes to the communities around like money, financial decision making? But these are people who are, again, financially underserved. You know, one story I tell all the time is growing up in the deep South, I knew older men that drove trucks that was 30 years old, barely kicking, but they had so much money like in their house. They just didn't use banks. They didn't trust banks. Delta, Mississippi didn't have banks. You had to drive 30, 40 minutes to a bank and they just didn't trust it. But from both your vantage points, from both your experiences, what do you see that people most misunderstand about the community of those trying to just want to be fair financial inclusion?
I think there's two lenses, right? There's a positive and negative kind of segment to what I was going to say here, right? On one side, it's, mismanagement of funds readily available that you don't have access to via credit, right? So using it for the wrong things, kind of going outside of your means and then understanding that you just bought something with your credit card for $1,000. But if you're making the minimum payments, when that's all said and done, you probably paid about $2,500 for whatever you bought. On the flip side of that, there's people that have sound financial habits, but don't necessarily understand some of the financial concepts that exist in this country. For pretty much my adult life, I've lived in South Florida, and I've seen a lot of folks come to the community with great financial habits, right? They're ready to buy a home. They got 40% down to be able to make this purchase or whatever the number is, but their credit invisible, right? They have sound financial habits where they think, look, I live within my means. I don't spend what I don't have. But then when it comes to being able to obtain a mortgage, now they're considered unfavorable because there's no history there. So I just think some of the trends is just providing the resources so folks can, kind of operate within their means and make sound decisions. So I'll stop there.
Ronaldo, what do you feel are some of the most misunderstood behaviors or patterns of people who just, again, just want to be included fairly?
Absolutely. So I think there are those who absolutely believe that people are in an adverse financial position due to irresponsibility. Like that's one of the things that I hear a lot. And I'm like, that's not totally the case. Sometimes it has everything to do with environment, it has everything to do with access. We also don't know the life situations or scenarios that may have caused somebody to be in the position they're in. For some people, everything was going well, and then they themselves or someone in the family got, very sick or even terminally ill, and that could have driven them to an outcome that's very difficult to come out of. And so when you don't necessarily have a community around you that has the knowledge base or the ability to help to address those specific scenarios, then an individual can find themselves in a cycle that's difficult to get out of until they're introduced to solutions that align with who they are, make it easier for them to address those critical things. And the same is true. I was talking earlier about high income earners who are literally in the same situation. Like you said, Sheena, there are a lot of high income earners that are paycheck to paycheck, sitting in a lot of shame and a lot of embarrassment, wanting desperately to get out of a cycle, and they don't know how to. And many of them that are in that scenario are first generation success, which is a conversation that we don't routinely have. That first generation success is joyful and extremely stressful because that individual has to, I heard somebody say it like this, that individual has to pay life's tuition to learn lessons that generations after will be able to follow, right? So I think that there are all these assumptions of, the one in particular is you got in this predicament because you're not responsible. And that is not always true. Sometimes you just were not resourced. Sometimes you just got dealt a bad hand. Sometimes there was not access available. The community isn't strong enough. And yes, we should all do our part to seek out the information that we need. But let's also talk about trust. And especially in the African American community in particular, when you talk about seeking out access to information we need, sometimes we don't have the trust in those environments that the information we're getting access to is right for us. So there are so many layers that put people in these predicaments. And I think that it is responsible to be more thoughtful about finding out why rather than assuming so that the right solutions can be developed.
100%. I think the worst one that I have heard, I recall hearing often, is that people who are financially underserved put themselves there, and it's because either they're poor or they don't want to work. And in my mind, I'm thinking, like, do you know the people I know that work 2 or 3 jobs, but yet they are still barely making it? It has nothing to do with them being lazy. I don't know why the assumption is that people who are financially underserved are lazy, don't want to work. That's just not the case. Like, I literally can tell you numerous people I know personally that work 2 or 3 jobs, but it goes back to environment. Now, could they maybe have gone to college, moved away from Mississippi, who probably be at 725 for the last of the 50 states to get out of it for its minimum wage? Possibly. But maybe their mom was sick. Maybe they couldn't leave. I mean, there's so many factors, and I think there's so many things that are misunderstood about the community as a whole, which leads to the next question. When it comes to credibility, particularly in the financial inclusion space, do you believe or do you feel that the practitioners, the institutions who have been teaching, preaching, posing as people who are helping the community, they don't always necessarily truly know how to solve the problem, because not all of them truly know the underlying issues that go along with the community they're trying. I think people have good intentions. Let me say that. I think overall people have good intentions. I don't think, but this is a question for you two gentlemen, but I don't think everyone who wants to help actually knows how to help, although they think they do. Ronaldo, we'll start with you. What are your thoughts?
Oh man, this is such a layered question, right? So I see this in multiple layers. There's the finfluencer audience, right? And we're in the influencer age where information can be released without
I
credibility.
want to tell you that me and Evan have so many conversations about influencers. I'm like, I just want people to stop listening to somebody who says, if you invest this $5, you are going to be a millionaire tomorrow. Or people who've never worked, they at a bank, never built infrastructure, all of a sudden telling people because they got 2 million followers how to get rich off of an Etsy
Yeah.
like file or something.
It's out of hand.
Yeah, it's so frustrating, right? We're in the influencer generation and we're in the environment that someone can release information without credibility. And as long as they do that in a way that feels good or entertaining, then people follow that information. So that's scary in itself that people are out there shaping people's view on what to do. And that's not always research based. And, behavioral design is not a part of their process. And what I see for a lot of irresponsible for influencers, at least, is that their lead in is always look at this grand life that I have and you can have it too. And I'm thinking that is the dumbest thing to do because for the average person, that grand life that you got to, that's really not their outcome. They need peace again, the pathway to peace for the quality of life they desire, and not just creating this over aspirational journey that feels uncomfortable for them that they feel like they can't attain. I was once heavy, and for years, I would not start doing what I could do to lose the weight because it felt overwhelming to me to think about. I'm not about to eat grass and I'm not going to do that. I like how food tastes and I live in Louisiana where food is good. Give me something that makes sense to me because I'm going to still eat gumbo. Tell me eat less of it, right? Help me to do it in the way that's reasonable. So I think that that's one of the issues that, all of the solutions that are put out there, they don't necessarily consider where people really are and what's reasonable. Then you have organizations that are trying to do it and they won't engage in research, right? So that's one of the reasons why, even as our organization, we right now, we've added research as a strategic pillar for our organization because when you think about designing things effectively, then there has to be some methodology to dig into what the reality is so that when you develop the solution, it is responsible. I mean, go figure. Why would you not consider talking to the actual individuals who are going through things, listening to what they're saying about their journey, finding out what might be the first thing to tackle, what their biggest barriers are? And I just think that might be the most responsible way to design the appropriate solutions, right? So that is what I see is that this is the last thing I'll say. There's this quest for speed. Everybody has to be first to the solution. And I think that this desire for speed has literally reduced responsibility. And so we have so many solutions in the marketplace. I cannot tell you how many, and I know you all know that I see on my timeline, and I'm like, that is not going to work. That's a fallacy. No, that's not how that goes. And I get frustrated because people can say whatever these days with no responsibility attached to it.
If I see one more person be like, I'm gonna do a budgeting app for people who I'm like, have you ever met a poor person? They budget. I don't need a budgeting app. I need to tell them how to increase my income. I budget by.
Exactly.
You ever met somebody that can make $20 last a week? I have. They budget by default. I don't need a budgeting app.
Yes.
All I can do is work with what I got. It's funny because Ronaldo, like that's literally what I was going to say. To your last point was, I remember a Denzel Washington interview, and he was talking about like just the media, and he was like, "You don't even care about being right; you care about being first." And that's literally the age that we're in. I just think it's important that the people that are responsible, right, with giving people information and knowledge around different things, like hold themselves accountable to the things that they're saying. I think it's important that the people that you're talking to, you do have people that share the same experience or look like you so you can kind of see yourself in their journey. It makes it feel more possible. It makes it feel more real. It's like if you have a music artist that's just telling a story that is you know that's not what they lived. It's very hard to, even though it may sound good, it's very hard for you to really feel that and say, no, this is my artist right here. And I think the same thing applies to when you're talking about your finances, right? Like who this banker, this financial advisor, or this finfluencer, which is maybe neither, can I really bank on the information that I'm receiving to go ahead and follow that religiously, right? Renal, you spoke about your journey in weight loss, and congrats to all your success. And I think if you think about it, it's like if the wrong person told you the things to do, you'd be like, I don't feel like I should eat ice cream for breakfast. If this sounds inaccurate, right? Like, so it's just thinking about those different things and just trusting the sources. I think there's also a sense of responsibility that goes to the people that we're talking about, that we're trying to help, to make sure that you're a little bit inquisitive and questioning the information that you're taking versus just taking a contrarian view as law, which I think happens a lot of times.
Yeah, shameless plug here. I was a 2025 ambassador for Interledger, but my research project was around doing case studies in cities with high populations of unbanked, underbanked, working poor. And I chose that path because two reasons. One, I lived in Mississippi, so I know what it's like. But two, one of the outcomes, or one of the objectives of that research was to prove that I don't care how big the research firm is, the Deloitte's, the whatever, it is no shame to Deloitte or any of the rest of them. But even the FDIC research, the data is skewed. It's not a true reflective of what really goes on in a lot of these communities. So my outcome is actually up on the Interledger community blog post, but I will actually be continuing that research. And I'm sure I'm going to step on a lot of toes. I'm going to piss off a lot of people. And that is actually my intention, because I want people to understand, like, if you give my cousin right now $10,000 for his refund check, and I know he's waiting on it because it's refund season, I guarantee you he's going to probably spend $7,000 on something he absolutely should not spend it on. He's probably already picked out some shoes on Gucci.com. He's probably already planned a trip to Miami, which he should not be doing. But
you can let me defend Miami for a second. There's things you could do.
I will say too, in a wellness perspective for Ronaldo, I think you should treat yourself when you get money. However, there's a level of responsibility. But my point in general is saying, like, you're never going to find the information in the FDIC research white paper. So I'll be continuing that research. But now focusing a little bit more on the actual topic of financial education. Evan, I know this is your life's work right now, what you're doing at Credit Academy. Do you feel, this might be a little controversial, but do you feel that financial education is the foundation to financial inclusion? And if not, where do you think we have gotten financial education wrong, and what should be the foundation of financial inclusion?
I will say, isolated by itself, no, financial education is not the answer. I think there's a component of financial education combined with experiential learning is really where the answer lies. I think a lot of times too, even just putting kind of my tech founder hat on for a second, right? Like, when people try to define what Credit Academy is as a company, they're trying to understand if we are a ed tech or if we're a fintech, and those shouldn't be separate conversations, right? If anything, there should be a fin ed tech. And what we're trying to say here is we're trying to seek alternative data methods to understand, like, who could we underwrite more of? And we're never taking into account the fact of, hey, does this person understand this information? And is there a way that we can demonstrate that somebody that knows a little bit more about their finances is more worthy of being able to obtain an unsecured product to start instead of a secured, right? So I think the combination of the conversation is really the space that we live in. And then as it pertains to just the education itself, I think an area that we've got wrong is we base it off of age, right? So I've encountered people that are 35 and know money like they're 13 years old per se, and then folks that are 13 and know money like they're 40, just based off of what the curriculums would tell you. And to give a parallel example, and this is really what we spend a lot of time working on with Credit Academy and our poor product Credit Quest, is basically, if you're learning a language, if I'm learning Spanish for the first time, it doesn't matter if I'm 15, it doesn't matter if I'm 50. Hola is hola, and I got to start there until I can demonstrate that I know differently, right? So just because somebody's 35, we shouldn't already start talking to them about compounding interest or things like, if we don't understand, if we haven't clearly grasped if they know the concepts that are introduced to them or not, right? So we just kind of move on, right? Like, if somebody's learning about math, we don't just start with calculus just because they're older. Let's make sure that they understand the multiplication tables, et cetera, et cetera. So many parallels I could say there. I just don't think that we have done a good job over the course of time making financial education predicated to demonstrated understanding and not age.
I love it, and I'm going to do a yes and, right. So I love the piece in particular about kind of more of an experiential design around financial education. I think one of the biggest issues in particular happens to be the static nature of most financial education opportunities for people. So it's not really positioned in ways that people learn well. I think in the inverse, when we decided to change our vision, and our vision became to eliminate poverty in our community so that our staff could understand the vantage point of people who lived in poverty and what they would be encountering prior to coming in to encounter them in our branch locations or on our phones or whatever, because we made the decision to do 100% certification for all of our staff as financial coaches, but we wanted them to understand their experiences. So we did a poverty simulator to make them have to go through this actual almost real life design and experience of what people encounter. And when I tell you, it got emotional. People were mad. They were crying. And I'm like, you're in a simulator. Like, you have the ability, you know that this is going to end and your real life is going to resume. But feeling what people were feeling, seeing what restriction felt like. Some of them were running into crime, like figuring, and some of them were choosing to commit crimes to solve their problems, right? As they were going through that, it meant more to them and it prepared them to be successful at serving people from those backgrounds. The same can be true from a consumer perspective. I think that the static nature of how we present things have made it harder for people to actually digest them. And so Sheena knows this. I'm 2E, right? So I'm gifted in ADHD. My ADHD side, you put a bunch of black and white words in front of me. It depends on, like, if you have not found a way to make me interested, I'm not paying attention to that, right? So it's gonna immediately make me feel just like both underwhelmed and overwhelmed at the same time. I'm underwhelmed with how you gave it to me, and I'm overwhelmed with trying to process it because I don't want to do it. I think that we have to be more considerate because we come into this conversation with these noble attributes of what we're trying to do, but we don't engage people with in the way in which they desire, which is why, and then I'll pass the baton back, you have the influencers who are not as responsible getting in the way because where they are succeeding is how they package content. They're finding ways to communicate in ways that people want to digest and process. And I just think, I don't know, that's a fundamental core issue that I am finding of people who come into this space to try to do work, whether they leverage technology or not. It's like once people feel noble, they automatically believe, I got the solution, I'm solving the problem. And people are going to just rush to this solution because I put it out there. But they did not think about experientially what that would feel like. And that's where a lot of the gaps exist in terms of what could be great and what actually is impactful.
For me, it's two sides right now. I look at financial education, and we had financial education at Capway, but financial education was a trending topic, I'm sure, before I was born. And yet, I always tell Evan, you still have opportunity to own the market because there's no one that you look at right now as a company and says, oh, you think financial education, you think, oh, they own the market. That's who I go to for real financial education. And it's like, this has been a trending topic for 30 years, and yet we have yet to solve the issue. But then on the other side of that, which goes back to the other side of this conversation of today, which is financial inclusion, is you also have the fact that for so long you had people who were unbanked, underbanked, the numbers were rising. I'm sure back Ronaldo in your time as CEO, they were rising. And then we had a moment in time from like 2018, 19 to like 2023 where the numbers started to decrease. People said, oh, it was due to the cash out, the chimes. But then the 2024 report came out, and now we're seeing the numbers go back up. Where is the issue? Because you would think with technology and the advancement of where we are in 2026, that those two things would be at a level, in my opinion, of not continuing to rise is an issue, but we would have found a solution. From both your perspectives, from both of your experience, why are we seeing these issues continue to rise versus being in a world that's so advanced, they're technically going the other way?
I mean, one part of this conversation that has so much impact on all of it is economic policy. So that's one of the things that cause that the ebbs and flows. Like certain economic policies change what consumers interact with, whether it's their prices for everyday products and services that they're utilizing, adjusting. So that's one piece of it, right? But then within, as it relates to that piece as well, because people don't pay attention to the regulatory environment overall, even those tech providers. And you notice, Sheena, you come into this space, you have these grand visions, and then you run into all different types of regulations. And it's like, wait, I have the heart to do it right, but now I'm having to build my platform with this regulatory environment in mind. So what I want to do aspirationally is not able to be executed functionally, right? So there's a very real aspect to this that, even how civic engagement impacts financial access for everyday consumers. And you have a lot of people that disengage in the civic process without really knowing that those decisions will impact what happens for you. When I was CEO, I could not get around the fact that the NCUA, the National Credit Union Administration, was going to come in to do an examination on my organization on a regular basis. And I needed to make sure that I was at least well versed enough in my strategy to argue whatever it is that I'm executing. And I knew what I could and could not do from a regulatory perspective. And I was good at arguing it because you could be, if you're in my shop as an examiner, I don't care what your feelings say. What does the reg say that I can and cannot do? Because otherwise, our strategy is considerate and we know why our business model is working. So that's a whole part of the discussion that we don't talk about: economic policy, regulatory environments, and how consumers can actually take control of the environment that's designed for them by getting civically
Cool, yeah,
engaged
the
as well.
ideas, the aspirations I had when I first started Capway, only for them to be like, can't do that. Your wording got to say that. That's not possible. That doesn't follow Reg E. You are 100% correct. Again, that's why for influencers, I'd be like, yo, that doesn't even make sense. Like, you can't even do that. Like, why are you telling these people that you're going to file bankruptcy because you can do that with your student loans now? Please stop telling these college kids that they can just write off student loans. Like, there are some loopholes now with this administration, but please stop. Like, that is not how the law works. So I do agree.
Yeah, I remember it was it was maybe like a year or two ago where people were talking about like the Chase like check cashing trick. They're like, yo, if you just write the check and deposit, like, yo, like this is fraud, guys. Like this isn't advice. Speaking kind of to that, not to fraud, but just like kind of though, but like to the digitization of everything has led to distrust, right? So if you think about all of these things that are being thrown at people that are, have so little resources to begin with, can I necessarily trust this new application or this product that's coming and saying, hey, download this and give us your social security number and then connect us to your payrolls, like to your direct deposit? So there's a lot of like, I don't know anymore. I just want my money and I want to be able to have access to it. So that's where some of the more predatory lending things can shine, right? Like you take people that still enjoy going to the check cashing place. They're not necessarily concerned with the exaggerated interest rate. They just know that they put their cash there and they get that money, right? And they have more autonomy and control to that. So I think, back to what we were saying in the beginning is for as digital as we continue to go, those analog components like really, really can't go away. Ronaldo used a great term with yes and that's one of the big things that I discuss when we're offering our solutions, right? Like credit unions are amazing with workshops, right? So you leave a workshop, you feel ready to kind of take the next step, but it might not be right then and there. So then where a lot of the gap lies is how do we turn that person into a member? And then that process can take up to 2 years and 6 additional touch points to happen. So we try to give that software that stays with them along the way. So when we're offering what we're offering, I always like to say financial education, everybody cares, but nobody cares. So in order to make it really real, it has to be something that's a tangible benefit to the organization we're working with, but then also something more near term and immediate for that end user. So they're not just saying the very, very small portion of the folks that use our products wake up and say, I can't wait to learn more about finance. So there has to be some carrot that's dangled in the middle to make them take that step. And that doesn't just exist on the end user side, that's also on the client side. So we think about a lot of those things. It's finding creative ways to get people out of their own way to, to really boost their personal situations.
Yeah, I'll say I've seen it from every side. And even now, even someone who's ran a fintech company, I don't have the answer. But what I have seen is I've seen it from trying to go into a school and say, hey, we have a financial education product. We want to give it to your students. And a principal or a superintendent tell me, I need it. I want my kids to have it. My kids need it. But my job is dependent on test scores. And this financial education ain't gonna help me keep my job. And it's not gonna help me on these standardized test scores. I've seen it from credit unions or banks who I need it for my members. I want it for my members. But a lot of times they also are like, I don't even have a tech person here. So, most of them are still, I won't even name drop, but most of them are still using systems that they signed for a 10-year deal. They want to get out of it. They barely keeping up with the world of technology themselves. And they're like, I don't know how to add anything else to what I'm doing. And then you have the big guys who I have said publicly and will continue to say, they will give fintechs, particularly financial inclusion based fintechs, enough money to check mark a box, but they'll never give us enough to actually make a real change. Because at the end, that affects them in the way that they don't want to be affected. We already saw where you saw the Capital One had to come down to say, okay, no more overdraft fees, because the chimes came and said, we don't do overdrafts. You see Wells Fargo now who says, if you go into overdraft, they give you 7 days, 14 days to put the money back in there before, they'll charge an overdraft fee. So I would say the big guys will never give us enough money to ever truly make the change because it will impact their bottom line too much. And so I don't know the answer. I don't know if any of us have the answer, to be quite honest. But I would love to see where it takes us. In your experience, where does responsibility for financial inclusion most often get misplaced? Is it on the individual? Is it the community, those in the community, or is it the system in itself? Evan, we'll start with you.
I think there's blame all around, right? I always say when I tell my story around my journey with credit, 95% of it was my fault, right? Like, I don't need a banker to tell me to not go crazy on Mitchell and Ness throwbacks and jerseys. That's kind of aging myself by that. If anybody that knows that, but that was me, right? But then there's a portion where it's the banker, the community. It takes a village ultimately, right? And when it comes to finances, many adults are children, right? So it takes a village to raise a child. So I think everybody has part to blame in the equation. There's a sense of self-preservation, right? Like you all mentioned around hey, this isn't going to help me keep my job, speaking to that, the principal of the school or whatever. And, you think through the lens of a financial institution, it's well, this isn't going to get us more loans or open more accounts, right? So we have to really take an extra second to think more harmonically. That can be a challenge in the world of tech. It's, it's a problem that we struggle with too, right? Because we're in tech, you're in the business of growth, right? So it's how can you go faster and get more of, right? And you can do that. There's definitely ways to be able to shortcut and achieve those KPIs, but that's the wrong KPI based on what you're trying to do. And I think you can achieve the same level of velocity. You just have to be a little more patient because, again, going to the fundamentals we've discussed, the people that we're trying to do all this for need more time. Time is where trust is built, right? But if you can really build that up and have a very strong base, you can actually achieve the same type of things. But yeah, when you get those workshops and you get those folks in the room, you got to call them out too, just like we're calling out our peers as professionals.
Yeah, I'll add to that. I think that I mean, and this is something we know, it often all of the responsibility is placed on the consumer. And we understand, clearly we're all ultimately responsible for our own journeys. But where I see things being disproportionate is that we do put all of that responsibility on the consumer without considering all of the other parties that you mentioned. Whether it's the community itself or if it's the system, right? All of these entities have a responsibility for the collective, right? So you have people who do live in communities. Sheena, you are, in a community. I know I grew up in a community in Louisiana where the haves and have-nots, the gap was super wide. There was some strategy around limiting economic development because they actually felt like they were protecting the historic nature of the community, which limited opportunities for people. The jobs in the community, while it's one of the richest areas of the state in terms of the high end of that parish, right? The jobs that are accessible are very low paying. So I knew for a fact, I knew I wanted to make money when I got older. I knew I'm not going to live here. This is where I took my personal responsibility to say, absolutely not, because I need to get somewhere where opportunity is accessible to me. But shame on that community for not creating the access that is necessary for more people, more residents of that parish to be able to get themselves out of a specific cycle. Everybody doesn't have, if you study poverty, the first step out of it is transportation. So if you're in a community that the wages are so low that they can't even address transportation, then by the design of the community, then there are limitations that are hard to overcome. But you bring that out to a system who's looking to advance the bottom line and therefore sometimes overlooking specific consumers because of a number of different factors. Sometimes greed is in the driver's seat. Then they have the greater responsibility as well for designing the products and services that the communities they serve actually need, which is why I'm certainly an advocate for local community, and I should say responsible local community financial institutions, because if an institution's being responsible, they've studied their community. They've studied them enough to create the products and services they need, and also to consider what contributions they can make to transform elements of that community so that this issue gets resolved. So I believe that the burden gets placed on the consumer in a manner that's way too heavy, considering all those other parts matter too.
Agreed. Agreed. All right. Finally, when you think about the future of financial inclusion, what must exist alongside financial education to ensure access is not just possible, but sustainable?
It's going to always come back to the products and services to me, right? So, the genesis of any business model is there is a problem, a solution is developed, right? So, at the end of the day, the solution is going to be important, but the solution is only as effective as the problem is actually studied, right? And making sure that we look at those problems as those that are important and very urgent. I feel like there are so many communities at risk right now because of organizations and entities, and also dreamers maybe not necessarily looking at the right problem so that they can develop the solution that's necessary. I think all the education in the world it happens to be amazing, but education that does not have access to the right types of products and services will do nothing. At the end of the day, that education has to be able to move out to a solution that actually addresses those problems.
I agree. I think one area where we can make improvements is around milestone transparency, right? Sometimes you see it with a benchmark for what someone's credit score is, but I think we can do more in that because it's encouraging, right? Like folks are trying to in economic mobility, you're trying to obtain a different level of financial comfort, a different level of wealth building. And if you don't necessarily see what's at the end of that journey, for folks that are already living with challenging circumstances, right, it can just be like, well, that's not possible, right? But if you can start to see kind of what gets there, that's where you start to see people lean in and take their journey seriously. When you see like, oh man, I've made my payments on time for a year. I've seen how my score goes from this. I've seen what happens when that collection after 7 years was removed off my report, right? I now I'm more invested. I think we can do a lot better around that and helping people. I understand some of the underwriting that goes on behind the scenes has to still be a little bit of secret sauce. But if we can just help people understand, like if you do this and you take this very next step, we're not going to say, hey, pay off your home. But if you could actually reduce this $500 credit card limit to where you're using less than 30%, and see the numbers go up and just keep people involved in their journey. Like that's one thing I can say, speaking to from experiencing it and seeing it in others personally, when there's more milestones that they can really get behind and see, that's where I think we'll start to move the needle.
Love it. Thank you both. I say, I put this on my LinkedIn, and I've said it in a few times when I'm speaking. I just hope that those who have been labeled part of the financially underserved community, I truly hope that they understand how valuable they are in today's world. And one of the things I mentioned when I say that is trash data in is trash data out. And I hope they realize how important and how valuable the data and who they are and the realness of who they are in their community, the level of value that's to it right now, because that's just not the data that we have. And I'm just hoping that someone, anyone, me, all three of us on this call can continue to push to them. You are beyond valuable than you probably could ever imagine in history that you are at this very moment in this time. Now, I'm going to say in history, in the present, but will be in the history. Your data, your life, who you are is probably the most valuable that I think I have ever seen it in my 10 years of working in the world of fintech. And so I do hope they say that. Before we wrap, any closing words from either of you? Evan, we'll start with you.
No, to just all listening, be it somebody that's going through the experience themselves or figuring out how they could help. Us at Credit Academy, we're always willing to have that conversation, but no, just own your respective role in the world of financial inclusion. Be it if you're going through it yourself, think about, hey, how can you make smarter choices? But then also too, if you're somebody that's trying to help cure the problem, make sure your all of your development and creative efforts are built with the intent and through the lens of the people that you're serving.
Ronaldo?
I will echo what Evan said. We also are here to help in any way that we can balance financial wellness. We are really here to be on your journey with you at all of life's financial touch points. So wherever you are on your journey and where you're trying to go, we want to help you to get there in the way in which you desire. We look at the holistic human. And we believe that wellness has to be addressed in every area. And so we certainly want to be on a journey helping you. And I'll land with saying, please don't let anxiety stop you from getting to the right solution, because I know that some people really get crippled in their anxiety about the situation. Money is certainly something that can cause people to freeze when they know that they're actually in trouble. And so I will say to you, turn to those sources and the resources that are built to help you, and don't let anxiety keep you parked in the place that you have the capacity to get out of.
Love it. Well, thank you, Evan and Ronaldo, for sharing your perspectives and experience. And thank you to everyone listening for being part of this conversation. Today's discussion reminds us that while financial education is essential, it cannot carry the full weight of financial inclusion on its own. Knowledge can empower, but systems ultimately determine access. As we close, I encourage you to reflect on where responsibility for inclusion truly lies, with individuals learning to navigate complex systems, or with the institutions and technologies that shape those systems in the first place. What would it look like to design financial systems where education supports access rather than serves as a barrier to it? That's all for today's Interledger Salon. To learn more about our guests and their work, please see the links in the description. We hope you will join us again as we continue exploring how financial systems can be built to include more people more fairly. Thank you for listening.